Hey there, Brad Castro from GreatOptionTradingStrategies.com. So over the weekend, as I do every weekend, I found a put-selling trade idea that I liked a lot and posted a full write-up on it inside the Leveraged Investing Club. It was on Nike, and as I also do every week, I expected to trade and manage it in real time alongside club members when the market opened on Monday. But we held off entering the trade on Monday, and that's what I want to talk about in today's video. But before we dive into all that, let me give you some real quick background and context. I've been trading options, mostly selling them since 2002. I launched the Great Option Trading Strategies website way back in 2008, where over the last 17 years, I put together a ton of resources, free downloadable guides, ebooks, special reports, case studies, etc., and nearly 300 articles on all aspects of selling options for income, as well as incorporating options into value investing and/or dividend growth portfolios to further stack the deck in your favor. And 13 years ago, I started my private option trading membership site, the Leveraged Investing Club. Not currently accepting new members, so no worries about a sales pitch here. But if anything we covered today resonates with you, you might want to check out the Great Option Trading Strategies website and all the resources available to you. I've added links to the site and the free downloadable library page in the description section below. And I've also pinned a direct link to my daily option tips and insights newsletter sign-up page in the comments section. Now, I know that entering put-selling trades or covered calls for income trades based on a specific delta value is all in vogue these days. I do have some theories about why that is, but that's a conversation for another day. Personally, I pay a lot more attention to a stock's technicals than an option's delta. But even if your approach is the opposite, I would argue that it still pays to at least monitor a stock's technicals. Because if you enter a trade and there was a warning sign that you either missed or ignored and the stock makes an adverse move against you, your safe and conservative delta might not stay that way for long. Case in point, as I said this week inside the Leveraged Investing Club, we were targeting a put-selling trade on Nike for the November 21st monthly expiration cycle, or about 4 weeks out. But then on Monday, the stock formed a red engulfing candle, as you can see in the circled area on this chart. This was not technically a bearish engulfing candle because that would have required the previous trading session to have been a green or up day. And Nike actually traded a bit lower last Friday. But it was still a bearish development and a very clear warning sign. And then you can see on the chart what happened the next day as Nike traded weakly and slid lower and then also broke its little mini uptrend it had been in since bouncing off the 65 share price level. So this chart is from intraday on Tuesday, somewhat early in the session, and Nike did recover some of those earlier losses, but not much, and the stock closed down 1.69% for the day. Now, I still do like the November 21st $65 strike price for selling Nike puts or $65 buy right covered calls for those who prefer the same trade as a covered call. And unless the stock really breaks down, I still anticipate entering the trade at some point. But I'm also going to wait for an attractive setup. And by identifying and then heeding a technical warning sign, club members and I have done ourselves a number of favors. We obviously avoided a less than ideal trade entry as the position would have immediately moved against us had we pulled the trigger on Monday. Once we're more confident that the stock is done drifting lower, we'll now be able to enter the same trade and collect a much higher rate of premium since the stock will be trading lower. Or, for the same reason, we'll be able to sell puts at a lower, more conservative strike and still get paid the same amount we would have gotten for the $65 short puts on Monday. And finally, one other subtle but important benefit is we get a little pat ourselves on the back positive reinforcement for being patient and disciplined. Trading can definitely provide dopamine hits, and even experienced traders can get itchy trigger fingers or otherwise force trades that aren't there. Or in our case, not there yet. And speaking of which, a while back I posted a video on this topic. It's called Perfect Put Selling Trade Entries or How to Catch a Falling Knife. And I put a link to that video in the description section. But it describes a situation back in June where we waited for 11 long trading sessions for Lulu to bottom and give us a put selling all clear. Had we jumped the gun, it would have been a very different trade. But because we were patient and disciplined and only willing to enter the trade when we got the setup we wanted, we gave ourselves an easy, no drama, lucrative trade. The final returns were 56.29% annualized on real cash secured capital over 7 days. Okay, finally, my standard disclaimer regarding technical analysis. Technical analysis is not like having a working crystal ball. It's simply a collection of patterns, indications, and behavior interpretations that tells you what's more likely to happen in the near term and what's less likely to happen. Think warning signs versus prophecies. Nothing's ever 100% foolproof, of course, but having a basic understanding of basic technicals can help keep you out of bad trades and improve the timing on those trades that you do enter. And if you enjoyed this and want more, be sure to check out the channel's other videos. I'm actively adding new content again and have a backlog of video ideas I want to share with you. I'm also organizing these videos in various playlist categories, so that should make it easier for you to find the resources that are the most valuable to you. Also, sign up for the Daily Tips newsletter via the pinned comment below. Options are the ultimate high-yield income vehicle and wealth building vehicle, and they can be structured in so many different ways to generate sustainable and safe high-yield income. The Daily Tips newsletter is a perfect complement to this channel because I can cover more topics and sometimes deeper in written form versus video form. Again, you can sign up directly, or there's also a link in the description section below to the Great Option Trading Strategies downloadable library page. Download anything from there, and you'll also begin receiving the Daily Tips newsletter automatically. Heads we win, tails Mr. Market loses. That means you should be coming out ahead on virtually all of your trades. Okay, until next time.